What is going on, guys? What is going on? Hey, what's going on, guys? Good to see you. Good morning. Good morning. Let's see. We got a lot of folks with us today. D, Irv, what's going on? Irv, wow. Man, you're writing a whole novel here. Matt, what's going on, Matt? Speed of Thought, Chris, Musica number one, Luis Cortez. What's going on, guys? What is going on? Let us wait for a few more people to join. But yes, so inflation numbers came out today. We are definitely going to go over that. Obviously, that is going to be the crux of our live stream here this morning. But basically, inflation has surged to the highest rate since 1982. This was not a real surprise to most people. I mean, if these numbers came out unexpectedly, you would see the market tanking even more. The market basically giving up a lot of its gains from yesterday, obviously, because we had a rocket ship sort of day yesterday with the NASDAQ climbing over 3.5% and the rest of the indices climbing over 2%. But inflation basically rose to year over year 7.9%. The consumer price index itself rose 0.8% this month. Now, this doesn't even reflect, and you guys, a lot of you guys probably know this. Big hug, fam. What's going on, Yumar? Ali, Heaven Paradise, Doc, Hand of God. Hey, is that a Maradona reference? Hand of God? Is that a Diego Maradona reference? Let me know. D-Rec, what's going on? Georgie, hey, what's going on? Have a great day, guys. So what I was saying was the consumer price index rose 0.8%, right? But this doesn't reflect the commodities spike that we saw in the first few days of March. So commodities were rising all throughout. February, obviously, but March had some pretty high spikes as well. We can go over these commodities, and I'm sure if we look at oil right now, that oil is back up. There was really no reason for oil to actually drop. Oil dropped by 13% yesterday, but that was all basically profit taking. There was no real catalyst to spur a drop in oil. Yes, you can see oil is back up another 3.5% today. After dropping 13% yesterday, hitting that 21-day moving average, oil is back up today as we suspected yesterday because, as I said, there was no real reason for the drop in oil prices. All it was profit taking. You can even see here, it says oil prices dropped in a sudden move on Wednesday, which was yesterday as of the time of this live stream, giving back some of the rally this month amid supply disruptions, blah, blah, blah. There was no clear headline driving the losses, but the move lower could be related to traders taking profits after the much speculated announcement of a Russia oil ban by the U.S. on Tuesday. So the oil situation got even worse, not better, right? With Russia's oil ban, that made things worse. So, with that said, there was no real reason for the drop in oil, and that's why you see oil prices back up today. And we will likely get back unless there is either some sort of ceasefire or there is a clear conclusion or not even conclusion, but solution to the oil deficit that's going to be caused by Russia's oil now not being a part of the market. Anonymous donated $10 to St. Jude. Appreciate you. So, if the Gulf states the Arab Gulf states don't step up and try to make up for that deficit in Russian oil, if the talks with Venezuela don't go through, if the talks with Iran don't go through. So basically what the U.S. is trying to do right now is they're trying to garner as much oil supply as possible from the oil producing nations to try to supply that to the market to tamp down these prices, because these prices are driven by a supply shock, right? But what I was saying was this right here, basically from this point all the way to here, this is all a February run-up, and this is what led to the U.S. inflation going up to 7.9% year over year. And by the way, the expectation was 7.5%, so we did come above expectations. And the consumer price index rising 0.8%. Wall Street's forecast was 0.7%, so they had a lot of the stuff priced in. But yeah, however, in March, we saw a bigger spike than we saw for the entire month of February. So next CPI data, this stuff will be reflected in April's CPI data, which is a reflection of what happened in March, right? So yeah, and I guess the one good thing, or not good thing, but an interesting observation is that bond yields are still going up. So this means that investors are not pouring into bonds as a safe haven yet. Now, my thinking, and I said this yesterday, is that when the 10-year gets to 2%, right now it's at 1.974. When this gets to the psychological value of 2%, we will start seeing investors pour into bonds again. But right now we're not seeing investors pour into bonds, meaning there isn't that much fear from today's CPI numbers, from today's inflation numbers, right? Most of it was priced in. Because if we saw a sort of a fearful reaction from investors, you would see investors pour into bonds. And what happens when investors pour into bonds? Well, bond yields go down, right? So as investors pour into bonds, bond yields go down. As investors sell out of bonds, bond yields go up. So we're not seeing any demand, or heightened demand, I should say, for bonds today, which is good news because most of this stuff was priced in. But I do think that once the yields continue to rise and the 10-year gets back to 2%, we will then see a flow into bonds. And this actually could be a good trade if you look at, and I'll get to your questions in a second, I'm sorry. But if you look at VGLT, which is Vanguard Long-Term Treasury bond yield, bond ETF, this is at support here. You can see we dropped another 0.86%. So this could be a nice trade here for when investors start pouring back into bonds. You will see this ETF rise. Another ETF that is option heavy, meaning their option chain is liquid, is TLT. So I would likely buy calls on TLT as well pretty soon. But if that 10-year does hit 2%, then I'm definitely buying calls on TLT. And remember, as bond yields drop, bond prices go up. So there's an inverse relationship between bond yields and bond prices. And if you want me to explain that, I will. Just give me a shout and let me know. All right. Hand of God says Diego Maradona reference. Yeah, I knew that. Sam the man, fake numbers. Well, I mean, all right. So you tell me, what are the real numbers? Sam the man. What's being reported is fake. You tell me what are real numbers then. Bro, you sound hungover. No, I barely drink. Doc, you know this. It's just I woke up at 5:30 a.m. It's still 6:30 a.m. West Coast time. Luis Cortez, or ear bites. You making fun of my ear? I'm not even sure what you're talking about. March CPI going to be nasty. Yes. Give us a good morning flex. Faction Zero, stop being horny. No. Oil is a risky play now. I mean, oil is always a risky play, of course, but there are less risky ways to play it. So, you don't have to play oil futures. You can play something like UCO, which is a crude oil ETF, right? And this thing also has pretty liquid options. So you can play this, but there's UCO, there's USO, right, which is the United States Oil Fund. You don't have to play futures, which represents a large capital commitment because the contracts are so heavy. But yeah. All right, let's see. Oil is like GME now. I mean, basically, but the CEO of St. Jude's makes like $20 million salary annually. Give your money to your local charities. Epic urban hippie. What the hell are you talking about? All right. Gold is running. Max capitulation hasn't even happened, in my opinion. Yes, I agree. Max capitulation hasn't happened yet, but there's definitely some capitulation that has happened, obviously, right? Most stocks are in a bear market. It's just the few that are at the top of the indices. It's the few that are at the top of the indices that are holding the market up. And you see these on the 5-minute chart. I posted this in the I posted this in the Discord, but you see on the 5-minute chart, there are these epic head and shoulder patterns on the 5-minute chart on indices. So this is actually going to be probably a pretty easy put trade below the neckline level, right? With this huge looming bearish pattern here, you expect it to break, or if it does break to the downside, you expect it to be pretty violent. So if, for instance, IWM breaks to the downside here, I'm expecting it to find support at around here. But these puts, especially the ones that expire tomorrow, will likely be on fire if that's the case. But what I was saying was, only a few stocks are holding up the indices. So a lot of capitulation has happened, right? It's not max capitulation, I don't think. I agree with you, but a lot of it has happened. But if you look at the NASDAQ, for instance, over 50% of NASDAQ stocks are in a bear market. You really only have the big box ones that aren't in a bear market, and some of them actually are. Some of the mega cap blue chips are in a bear market, meaning 20% or more from all-time highs. And you see Amazon green today because it announced a split yesterday. So Microsoft, Apple, Google, Amazon, Nvidia, and Tesla, Facebook. But Facebook is in a bear market, and I believe Nvidia hit bear market status as well. And I think Tesla did if you measure it from all-time highs. So most stocks are in a bear market. And we did have a epic .com-like crash if you look at most of the high beta stocks. So if you look at something like Zoom, for instance, and we can run through all the tickers that were popular in 2020 and 2021. Zoom was almost $600, trading now at $100. You look at TDOC, same thing. TDOC was trading at over $300. Now it's trading at $63, right? DraftKings, and the list goes on and on. I mean, you guys know the names that were popular in 2020, 2021. DraftKings was trading at 74, now trading at 17. Neo, very well known, was trading above 65, was it? Now currently trading at 18. So we definitely hit a bear market on most stocks, and there has been a ton of capitulation. So, yeah. This is now the time, in my view, to start rotating into quality. And we could talk about what stocks to focus on, what stocks to look at during this environment. I did a video yesterday talking about that, but PSG out of the Champions League. Yeah, I saw they lost yesterday. Siona Holt donated $5. Thank you so much for your donation, Siona. Krispy Kreme pie. You ever have a breakfast baconator, man? I'll DoorDash you one. No, I don't eat breakfast. I pretty much fast until 1 or 2 p.m. I don't get hungry in the morning, and I like to have a big lunch. So I usually just do coffee and water in the morning until like around 2 p.m. Just want to say good morning. Neo put as flying, miss my entry. Jason Pareno. Yes. So what Jason is referring to is the options day trade watch list, which I send out every morning on the Discord. This morning I put it in the on Twitter because I said I would. And he's referring to this. So if Neo hits below 1920, then we are buying the 19 put. This is how you read this, by the way, for those that have questions on how to read this. So he's referring to the fact that Neo fell below 1920, and the 19 put right now is on fire. And you can see Neo right now is at 1860. So yeah, those 19 puts are in the money. Congrats to those who took the trade. I'm not in the trade because I'm over here. But congrats to you guys who took the trade. Jesus, I love you, bro. I love you too. Any timing on Amazon stock split? No, I think like Google that I don't think they've announced it. We can check on that though. Let's see. Amazon stock split. 20-for-1 stock split. First stock split since 99. And the fourth since Amazon. Oh, I was mistaken. I told somebody yesterday that this is only Amazon's second split, but apparently this is Amazon's fourth split. I thought 99 was only the first time they split. So to whoever I answered on the Discord yesterday, apologies. This is their fourth split, but no, there isn't a date yet. There isn't a date yet. So just like Google, there isn't a date. But, it's so funny. These companies are so savvy. They tend to do this when momentum is trending down. However, I always laugh when I see this where it says stock splits are cosmetic, do not fundamentally change anything about the company other than possibly making the shares accessible to. I mean, it fundamentally doesn't change anything about the company, but it fundamentally changes the way people trade them. Because if you look at an Amazon chain, for instance, like an Amazon options chain, and we could take a look at this now. But if you take a look at Amazon's options chain, it is damn expensive to trade Amazon options, right? Because the stock price is almost $3,000. So if you wanted to buy, say, just for shits and giggles, an at the money call that expires in April, right? So next month, you're paying what, $14,000 for this call? So when Amazon does a 20-for-1 stock split, these options prices split as well, right? Or can be divided by the factor of the stock split. So, can be divided by 20 theoretically. And these options become much, much cheaper. So it fundamentally changes the dynamics of how people trade them. All right. In terms of the inflation numbers and the effect that it's having on the market, as I said yesterday, most of it is priced in. And that's why the market it's down today, but it's down 1% all across the board. 1% S&P, 1% Dow, 1.7% Nasdaq, 1% for the Russell 2000. That's not really, again, the Nasdaq was up 3.5% yesterday, so it didn't even give up the gains that it made yesterday, and that's because most of the stuff is priced in. As I said, most of the commodities pricing for February was known. So there isn't anything that really fundamentally changed about inflation. All this, like when you look at a chart of the S&P 500, for instance, the reason or part of the reason that we saw this huge violent downtrend since really since New Year's basically, is because the commodities pricing is so high. So investors and traders are acting in real time to that commodity pricing and the already formed expectation that inflation would be high, right? So that's why when you see inflation numbers come out like today, as I said yesterday, most of this stuff is priced in. So don't expect a major crash just from the inflation numbers. Now, I do think that the indices will continue to be in this downtrend here. There's a clear down channel, right? We'll continue to be in this downtrend until something fundamentally changes. This is clear to me. And we can even get to, the support level of around 4,000 on the S&P 500 if nothing fundamentally changes and the economy continues to stagnate. But obviously, we also have this death cross looming here between the 50 MA and the 200 MA. But, obviously what economists and finance experts are afraid of is stagflation, right? So this is when prices continue to skyrocket as the economy is slowing down. Let me get to your questions. Morning. Gush has always done well for me on swing trades. Yes, Gush is also another one that you can swing trade as it relates to oil. People who diss St. Jude's Hospital just don't want to give. CEO makes big bucks like all do, but he is doing a bang-up job saving the children. Yes. All right. Slum. I just started reading Principles by Ray Dalio. He spoke on devaluation. Where's your... Hold on. Let me get back to your... Slum, let me get back to your question. Devaluation of the dollar and how it happened prior to 1971. Is it possible for this to occur again, even while the dollar is not backed? Whoa. Wait, if you're talking about devaluation of dollar, I mean, that's happening in real time. That's essentially what inflation is the devaluing of dollar. So it is occurring. What do you mean, is it possible to occur? I think what you're talking about is the threat that the U.S. dollar will cease to become the world's reserve currency. Maybe that's what you're talking about. I'm not sure. But when you say, is it possible for the dollar to be devalued again? Yeah, I mean that happens every day through inflation. It is being devalued. That's what inflation is. Gemma says, "Good morning. Good morning, Soner. Good morning." Uh, Wendy's stock is up 3.42% for the year. Talk about a hedge. Yes. Oh, and we'll talk about stocks that do well in stagflationary environments too, because I think that's important to make sure that our portfolios are as ironclad as possible. Jason Garcia, shout out for knees over toes. Yes. I mean, that knees over toes, he's talking about a trainer on Instagram. That is life-changing. If you want healthier knees, follow Knees Over Toes guy. I've been doing his stuff for years. It is life-changing. What should be an entry point for Amazon, Nvidia, and Apple? Funny that you say this, because just yesterday on the... Let me see. I don't know why my computer's acting slow. But just yesterday, I said in the stock chat, what did I say yesterday? I'm looking for it. But I said if Amazon can hold this level, this is a good entry. And then they announced the stock split. Oh, this is what I said. I said this yesterday at 10:30 a.m. West Coast time. I said if Amazon can hold this level of support, this is a sweet entry. And this was before they announced the split. I'm not saying I knew that the split was coming, but you essentially, folks are always going to ask what is a good entry after the fact. This thing is sitting at support, right? Like, you should be more comfortable buying things when they're red than buying things when they rally. I still think Amazon is at decent support now. I think it's only up 4% today after the split announcement. But, you know, Amazon sitting at 2,700 is a no-brainer. And then you asked about Apple, and I can't remember what the other one you asked about. But, you know, this stuff is... Apple at the 200-day moving average is a decent entry. It's not great. Like, if you look at these valuations, they're still pretty expensive, but it's certainly better than it was for, you know, most of the second half of last year. And did you ask about Nvidia? I don't know if you asked about Nvidia. Let me go back and see. Yeah, Nvidia. Nvidia sitting at the 300-day moving average. I mean, these are dollar cost averaging. These are dollar cost averaging points, right? Nvidia is down 36% from highs. It's still valued pretty high, by the way. It's not like it has a great valuation. So these aren't perfect entries. But, and by the way, guys, can you do me a favor if you were on the stream? I always forget to say this, but hit that thumbs up so that other people can find this. Hit that thumbs up on the stream so that other people can find this. Appreciate you. Yeah, I mean, these are all decent, and these are all decent dollar cost averaging entries. But they're not great entries. But they are better than when you were probably thinking of entering them at the highs, right? So, all right. Let's see. How is that good for gains? I'm not sure what you're talking about. I think that June 6th is when Amazon split should take effect. Don't quote me. Maybe I'll look that up. What is your strategy for playing Amazon stock split? Can you give your opinion? Yeah, I mean, you know, the first one is buy Amazon when it was at support, before the split announcement. Obviously, you can't go back in time. I'm not really going to be playing the stock split, but before the stock split, except for buying the stock. But I think that both for Amazon and Google, what you can do is open up a long-dated diagonal call spread, right? Or what they call could be called a poor man's covered call, where you buy a long-dated call that's near the money, and then you sell a call, you sell shorter-term calls that are out of the money in order to finance that. Alia Higazi, me too. Haven't had breakfast in 10 years. Oh, yeah. Intermittent fasting. Wow, you guys are still on that? Fasting definitely sounds better than skipping breakfast. Okay. You guys are so off topic today. Thought they said June. Okay. Okay. 3 people are saying the split is in June. The split is in June. So it looks like June 6th. There you go. Hans Bez donated $5 to St. Jude's. Appreciate you. TQQQ puts around Fed meeting. No, I mean, it really depends on the price action between now and what happens on the Fed meeting. I would opt to wake up on March 16th and look at the day trade watch list that I will send out and trade that, because it will give you the levels for the day. You don't have to guess. So, yeah. And guys, hit that thumbs up if you are on that stream. Google's in July, I think. Might be. You were the most humble trader ever on YouTube. Bless you, man. Keep up the good work. Appreciate you, Sanjeev. Appreciate you. Thank you so much. Value investors, everything money, said they may get into NEO if it drops to 12. I might join them. Sure. Sanjeev donated $10. Appreciate you. Thank you so much for your donation to St. Jude's, man. Yes, Amazon has announced the dates. It comes into effect on June. Wish I had waited on NEO. China garbage killing me. And NEO was up, by the way. I don't know if you guys were tracking this for you NEO investors, but after hours, NEO was up because it was listed on the Hong Kong Stock Exchange. And it was up, I think, 5% then, but it dropped back down. Anonymous donated $10 to St. Jude's. Thank you so much. Regine, what's going on? Good day to you too. Robin, you said yes. Not sure what you're referring to. Can you talk about EV car companies, Ford, GM, Tesla? Okay, sure. So thinking about buying CVX puts, I think buying CVX puts was good yesterday. But yeah, I mean, you don't want to buy puts on oil after it's seen a relief and will likely continue what it was doing. In terms of EVs, so I've seen this from a lot of folks saying, oh, EVs are going to go through the roof because the price of oil is high. Guys, you guys know that the commodities required to make EVs and EV batteries are also in a supply shock right now, right? The main one, not least of which, chips. We are in a major chip shortage required to power up EVs as well as other cars. That is why you're not seeing EVs skyrocket. I saw this comment a few times in the last couple of weeks where people are like, oh, yeah, EVs are going to skyrocket now that the price of oil is $130 a barrel. Well, look at EVs. They're doing nothing. And it's not because there is no value in EVs, especially when the price of oil is high. It's because the commodities required to build EVs are also in a supply shock, right? So chips are in a supply shock. And by the way, oil is required to build EVs too, right? Oil is not fueling EVs when you're driving them, but oil is required to build EVs as well, as oil is required for manufacturing, shipping, etc. For a lot of parts, right? A lot of parts are made from oil. But commodities such as lithium, commodities such as other metals that are, especially ones that are concentrated in that part of the world, in Russia and Ukraine, those are in a supply shock as well. Commodities required to build chips themselves, everything is in a supply shock. That is why you're not seeing EVs go up, right? So those of you that think that it's intuitive that EVs start skyrocketing because the price of oil is up, no, because unfortunately all commodities are up. Every single one of them, copper, lithium, palladium, everything required to make EV batteries and chips, they're all just skyrocketing. That's why you're not seeing EVs go up as the price of oil goes back towards $120 a barrel. Why buy Amazon now? It's going to $2,400. All right. Alfred Newman says it. You guys, he can read the future. Amazon's going to $2,400. Amazon was $3,700 last year. Safe to say now is a good time. Yeah, it's certainly a better time. Doesn't mean it's a perfect entry, but you can dollar cost average, right? And I will talk about stocks that are good to buy during inflationary periods. We're going to go over that next. Why did you pick 332.75 as the call price trigger on the Qs? Because that was above the shoulders. So it was forming this like head and shoulders pattern. That was above the shoulders, right? Is Diz a good entry at 130? I mean, guys, when you say good entry, what do you mean? Like, do you mean that if I buy here, can you guarantee me it won't drop further? No. But certainly 130 is better on Diz than 200, right? So Diz is down now. It looks like Diz is also in a bear market, down 34%. Yeah, I don't mind an entry here after filling this gap that we saw back in November 2020. But it does still look very bearish to me. Diz looks very bearish. It doesn't mean that this isn't a decent dollar cost averaging point, right? If you're trying to find the absolute bottom, I have news for you. You probably won't. So figure out what a company is fairly valued at and whether the price represents that valuation. And I think Diz here is decently valued at 133. So yeah, I think that, we could fall down further to the next support level, especially because this huge head and shoulders here doesn't give me comfort. But yeah, we could certainly fall down to like the 120 level, which would be the next support. But it doesn't invalidate that Diz is a better entry here at 130 than it was at 200. Anonymous donated $10. Appreciate you for donating $10 to St. Jude's, whoever that was. What is your take on gold? I think you missed the boat on gold. Tropical Danny. Gold was in a sideways channel for the longest time, and nobody wanted to touch it, right? It kept touching this like 161, 157 level on GLD, and is now near an all-time high. Along with all the other commodities, saw a little drop yesterday, but you're buying near the all-time high, so I think you missed the boat on gold, in my opinion. What do you think about Tesla? I just went over Tesla. Keep forgetting to like on live stream. Just did. Appreciate you, Stereo Hound. Everyone else, hit that like button, please. LOL, what, David? Say less. Not sure what you're talking about. Eloy, great to see you, man. What's going on, Eloy? All right. Let's see. I see June 2. All right. So Amazon's split is in June. There you go. A lot of you guys confirmed it. That is why we do these live streams. What does less than or more than? Hold on. I got to get to your questions. What does less than and more than mean on your day trade watch list? That means that if the price goes above 332.75, you buy the 335 call. If it goes below 328.95, you buy the 325 put. But you don't just look at the price of the Qs and say, oh, it's above 332.75. I'm just going to buy the 335 call. No, you have to play the breakout. You have to look at the chart, right? And play the breakout. So here's the level at which I'm going to buy puts. You're monitoring this in real time. And I have the 1 minute up top and the 5 minute on the bottom. That reminds me of that Too Short song. 20's on top and the 50's on bottom. And you buy a put as soon as it crosses below this line. Now, in a very volatile environment, what I've been doing is I've been waiting for close, usually, depending on what I'm trading, but most of the time, waiting for a close on the 5 minute below that level. But that's what the less than and greater than means on the watch list, right? All right. Jonathan North, can you teach us about NPV? That's net present value. You ask about this all the time, and I feel like you're trolling me. Also, you can look this up yourself, what NPV is. How does interest rates impact value? Okay, so the reason that growth stocks take a hit during interest rate rises is because interest rate increases the cost of money. And looking at the indices now, as I said, this is what I was saying yesterday. Most of the stuff is priced in. Don't expect a major crash after CPI data is released. So S&P down less than 1% now, 0.82. Dow Jones down 0.5%. NASDAQ is the one that's hit the hardest at 1.6%. Russell 2000 down less than 1%. It's not, most of the stuff in the CPI, I think, was known. Fatima says, at what time CPI? It was already released, Fatima. Rewind the tape. We talked about it in the beginning of the video. Came in 7.9% year over year versus 7.5% expected. So slightly over than expected. What was I saying? Jonathan North, the reason that interest rates impact valuations is because companies are valued at their the value of their future cash flows, right? So if the interest rates go up, that diminishes the value of future cash flows, because when interest rates go up, the cost of money goes up. So that automatically diminishes the value of their future cash flows, right? That is why growth stocks in particular tend to drop, because growth stocks rely on growth in order for them to keep getting priced higher on the stock market, right? Now, if that growth is impacted because the cost of money goes up, that's going to diminish the value of how we measure their growth, which is measuring their future cash flows discounted to today, right? Zillow over Redfin, don't know what that means. Are you talking about the stock, or are you talking about the service? Mr. J, good morning from Pico Rivera, California. What's going on, Mr. J? That's right down the street, bro. Do you like GGPI? I sold puts on GGPI that are up 40%. I sold those a while ago. But that was the way in which I like playing GGPI, because you were able to sell puts that would give you GGPI for less than the $10 default pricing of the SPAC. But yes, I think it will go up, after the merger with Polestar. I don't like it long term. Not at all. Just like all SPACs, I think they do have a trading range, right? JD dropping even with crushing earnings. I mean, did you look at their guidance? What does their guidance look like? CPI looks cooked up, Abilash says. What do you mean? I mean, the CPI numbers are objective. It's objective data. The reason it looks cooked up to you is because it doesn't include the price run-ups that we've seen in commodities in March, right? It just goes until the end of February. So what you're seeing now is our numbers from the end of February. And as I said at the beginning of the stream, it's not going to reflect what you see in March. The March numbers are going to come out in April. So I don't think it looks cooked up. Jonathan, do you think Biden is intentionally trying to harm the USA? Come on, man. No, I don't think that any president's trying to intentionally harm the USA. No. I do think that the way in which we have played this Russia thing, and we are playing this Russia thing, I don't know. I mean, obviously, it's so easy to armchair quarterback this thing, right? To sit on your couch and be like, oh, yeah, this is what I would have done. But, yeah, as a citizen of the country, you can criticize what the government is doing. And I'm always critical of every single government when I think there's, when I think it's fair to be. But no, what is it? What kind of conspiracy theory is it that you think, like he's a Manchurian candidate? He's trying to ruin the country? No. Looks like lithium stocks are moving. Moon Yu says, yes, all commodities are moving now because they had a relief yesterday, as I said, but there was nothing fundamentally that changed in the supply side of the equation, right? Oil is still effed. Metals are still effed. Wheat is still effed. So, yeah. Vortexian, are you done fear-mongering? Are you talking to me? I don't know that I'm fear-mongering, fam. Hopefully you're not talking to me. What happened to McDonald's? It keeps going down. Why do you think? It keeps going down because their margins are going to take a hit because the price of all food stuffs is going up, right? Any recommendations for stocks that pay good dividends? Yeah, I did a whole video on this about stocks that pay good dividends, but you can actually look this up very easily. Chatty Lutfi donated $20. Appreciate you. If you look at, thank you, Chatty, for that. If you look at Seeking Alpha, you can actually look up stocks by dividends, by the way. So if you go to top rated dividend stocks, Now, I wouldn't just buy whatever it says the top rated dividend stock is. I want to look at the company's balance sheet. So you're going to have to take time to do this. I would suggest doing this on a weekend, but look up their balance sheet, look up their guidance. It's very important that they have strong guidance. Look up their earnings. It's important that they're profitable, right? Consistently profitable. And then you could see what their yields are, right? What the dividend yield is. So if you look at yield trailing 12 month, you'll see what their dividend yield is, right? For the last trailing 12 month, or their forward dividend yield, either or. But you could sort by this, and you could see what are the highest dividend paying stocks, and then go through this list and see which ones you like. Like Qualcomm stands out to me for sure. Intel was another one that stood out to me. And then Vale, which was, I mean, at one point the stock looked like it was beaten up, but especially as commodity, and you can see this head and shoulders that I drew back in December, saying that if it broke out of this, I would be a buyer of Vale, currently trading at 18 with an insane dividend, giving out a 0.72 dividend. This is a quarterly dividend too. Is it quarterly or biannual? No, it looks like it's quarterly. Yeah. But yeah, so do that. Go to Seeking Alpha or whatever service you use. Look up the stocks that pay the highest dividends. And now this isn't a stock that pays the highest dividend. This is based on a criteria that's selected in Seeking Alpha. So this is a U.S. stock that also has a quant rating of strong buy, a high dividend safety grade, right? Because remember, dividends can be taken away at any time, and some of these other metrics here. So yeah, go through this list and see which ones you like. I personally like Qualcomm for sure. And like I said, Intel, I like it even though it's not on here. But yeah, in terms of what stocks do well in inflationary periods, I shared this yesterday, but Warren Buffett actually has a warning never to hold cash during a war. And you can see why, right? Your purchasing power dwindles, absolutely dwindles. When you look at the price of wheat, when you look at the price of oil, I mean, by now you guys know this, but wheat went up 60% in a month. You guys know the story with oil. Oh, wow, wheat actually is dropping another 6% today. I wonder if we'll get to that 21 EMA. I might re-enter wheat futures at the 21 EMA because the picture on wheat has not changed. And it's not the harvest, right? I think wheat is harvested in spring and summer. So it's not like we can create more wheat on the fly. Not like oil where you could supply where you can increase the supply to the market pretty instantly. But that's why Warren Buffett says don't hold cash during a war, because the price of all commodities goes up and your purchasing power dwindles. So these are the stocks that, there's a finance blogger by the name of Mr. Blonde, and I shouted him out yesterday. But based on his research, between 1960 and 2019, the markets were in a stagflationary period 31% of the time. That is a lot higher than I thought, which is crazy. But he assessed that during those periods, these are the stocks that tended to do well, right? And most of them, as I said yesterday, 10 of them are in healthcare. 10 of these stocks, right? And there's a healthcare ETF called XLV, which is the healthcare sector of the S&P 500, which is currently at support. But basically, most of these are in either consumer staples, consumer discretionary, energy, and then you have a couple of tech stocks here, Google and Facebook. But basically, looking for stocks that are currently undervalued, that have a high profitability grade, good estimate revisions, good guidance, and yeah. So you definitely want to add stocks like this to your portfolio during times of high inflation. I mean, we added XLE a long time ago, expecting higher inflation, but also because XLE, which is the energy sector of the S&P 500, was at the 200-day moving average. We added this back in December when it was $50, currently trading at 76. And yeah, I did start trimming my position here, although I still hold quite a bit of XLE. But the one that I was talking about was XLV. This right here is the healthcare sector of the S&P 500 at the 300-day moving average. I think this is a decent long-term buy here, especially if we're going to be entering a stagflationary period. As I showed you, healthcare stocks tend to do really well during stagflationary periods because they're not really affected by that stagflation, right? And unfortunately, health issues tend to rise when we have periods of high inflation and stagflation because people cannot afford proper nutrition, people cannot afford medicines, etc. So yeah, hopefully that answers a lot of your questions. I went through a lot there. Let me get to your questions. Oil equals plastic. Yes, for sure. It's a big part of making them. Yes. All right. Let's see. Vortexian. Doom is upon us. Fear-mongering, go back to your safe space. Yeah, I hope you weren't talking about me, Vortexian, when you said fear-mongering. I don't know what. Tell me exactly what you thought I was fear-mongering about. I'm just talking about the objective data in the markets. Thoughts on NEO for the long term? Yeah, NEO's. I think NEO's terrible. Go back to the video that I did on NEO 3 months ago, and see how far it's dropped since that video. I just for me, it's going to take a lot of convincing for me, especially now. You guys see how risky the geopolitical sphere can be now. It's going to take a lot for me to invest in something heavily that's in a country that's adversarial to the U.S., right? So imagine you had invested big in a Russian ETF or Russian stocks, and then this happens, right? Same thing with China. I'm not saying that there's going to be a war situation with China, but there is definitely a lot of Cold War type stuff going on between the U.S. and China, especially as it relates to business, right? They're always threatening. China and the U.S. are always threatening each other as it relates to delisting, as it relates to not allowing companies to operate in each person's geography. So in each country's geography. So it's it's not something that I'd be comfortable investing a lot of money in. And not only that, when you buy NEO on the U.S. Stock Exchange, you're not even buying NEO the company. The company owes you nothing. You have no stake in NEO the company. None. What you have stake in is something called depository shares or depository receipts, right? And that is basically, those are shares or receipts in a shell company that is stationed in the Cayman Islands. So you're not even buying NEO the company. Go back and watch my NEO video, and you'll know why that is. Vortexian, all his videos are red alerts. Really? Okay. I mean, I would hate to see what your portfolio is, what your portfolio looks like, if you can't objectively look at data and say, okay, this is what the market is doing now. This is how I'm tackling that. All my videos are red alerts. All right. So go back to yesterday's video, asshole. Was that a red alert? No, I was telling you what stocks do well in inflationary environments. That was just yesterday's video. But sure, I mean, look, I could see how feathers are ruffled during times where the market is not doing so well, especially if you don't know how to hedge, right? If you look at these videos as fear-mongering and not as me trying to tell you what's what in the markets, what has happened before, what is happening now, how the market behaves when we've seen similar situations, what stocks do well, how to hedge through options, how to hedge through futures. If you think all that's fear-mongering, maybe the markets aren't for you. I can appreciate that the market has kicked a lot of people's asses, and that is probably why you have your panties in a bunch right now, Vortexian. But maybe the market is not for you if you think that is fear-mongering. That is basic. That is technically and ultimately strategy. That's all I'm doing, strategizing. What are some signs that the market has capitulated? It's hard. Obviously, if everybody knows that, then you would be able to time the bottom. But a lot of signs that the market has capitulated is when you see dwindling volume. First of all, the market enters a correction or bear market, right? Which we are in now. Certainly correction on the S&P, bear market on the NASDAQ. What you're looking for is support as volume starts to decline, right? Volume starts to decline, and you see the price of these indices or whatever you're looking at now start to establish support as volume declines. That is what you want to look for. It means that a lot of sellers have exited the markets, but there are many signs of capitulation. You'll see the VIX drop, for instance, right? So the fear index, which is called the VIX, where is it? There it is. You'll finally see as the prices have tanked, as the price starts moving sideways, you'll see the VIX drop to normalized relative levels, meaning relative levels for that time. The VIX is still really high. The fear gauge is still really high. We want to see the VIX below 20, and it was below 20 for most of 2021, which was why 2021, if you had positioned your portfolio into high quality, why 2021 was such a good year is because the VIX was really low, so stocks had a chance to rally, or at least quality stocks had a chance to rally. If most of your portfolio were in high beta names, then you probably didn't have a great 2021. But yeah, you'll start to see the VIX trail off, right? You'll start to see basically bond yields go down as investors pour into bonds and out of stocks. So a lot of these are signs of capitulation. There are many other signs. I mean, you can Google this. Google, capitulation graphs or capitulation charts, and a lot of folks will use different metrics in order to try to measure this, right? But I don't think we're quite there yet. The VIX is still too high for my taste. I'm currently monitoring this like a hawk, which is basically the 10-year, 2-year yield. This one, we can't get below 0 on this, or else we will for sure hit a recession. This is basically a curve measuring the 10-year yield, treasury yield, versus the 2-year treasury yield. And as logic would have it, the 10-year is supposed to yield more than the 2-year, meaning you're supposed to get more money for investing in the 10-year yield than the 2-year yield, right? But an inversion happens when the 2-year yield yields more money than the 10-year. Why does that happen? Well, this is when folks get extremely scared because of inflation, and they take their money or they stop investing in the 10-year yield, and they would rather go into the 2-year yield instead, right? But that lopsidedness happens so much that the 2-year yield starts to rise well past the 10-year. And that inversion is dangerous. And every time that inversion has happened, meaning that we fall below 0, we've seen a recession, right? So I'm monitoring that like a hawk. That doesn't really go towards your question about capitulation, but yeah, hopefully that makes sense. Clown Baby says, has he been wrong? Look at the market. Yeah. I mean, I don't take joy to say that. That how right I was or whatever. But yeah, basically, I'm objectively looking at the market and trying to assess it positively. That's it. Does Nike look bearish? Manar says. I'll get to Nike in a second. Timing the market is impossible. Highly disagree, Robin. Highly disagree. That is an overused statement. Timing the market to a certain extent is possible. Timing the market, as in someone tells you this is the absolute bottom, that is impossible. But that does not mean that you just throw your hands up and do nothing and say timing the market's impossible. I'm just going to sit on my portfolio. No, 100% no. There are aspects of timing the market that are possible, as in knowing when a stock currently, based on levels that you see, based on its valuation, knowing when a stock is better valued than other times. Yes, that is part of timing the market. Saying that I'm going to only buy Tesla or Nvidia or Apple at these levels versus other levels, yes, that is an element of timing the market. Saying that you're going to open up a hedge because things look toppy at the moment and because commodity prices are rising, that's timing the market. Buying calls on commodities, that's timing the market, right? But if you're saying timing the market as in, oh, I know when the exact bottom and top is, no, I agree with you. That is mostly an exercise in futility. But that does not mean that there are elements of timing the market that are impossible and even not helpful. Of course there are. Otherwise, just be a passive investor. Just every month put money in the stock market and don't look at it, especially during these times, because, these drawdowns can be brutal. But for sure, timing the market to some extent is possible. Manar says, Nike, does it look bearish? Yeah, I mean, most stocks look bearish. Nike looks like a falling knife right now. It is at a major support level going all the way back to December 2020. But Nike is also hit by supply chain constraints. This is the fear, Manar. It's not that these companies are bad. It's that what's going on with supply chain constraints is so dire, and you also have rising prices of commodities, right, required to build and ship these things. That is what can lead to stagflation and a potential recession, right? It's not that Nike is bearish. Nike sales, actually, if you look at their last earnings, I think that it was their best quarter ever in terms of revenue. But now shipping products, like if you try to order anything of value, it is backlogged, right? A lot of companies don't have stock of a lot of items. Shipping is near impossible. Now fabricating and manufacturing this stuff is impossible, or not impossible, but a lot more expensive. So you have to look at the macroeconomic picture. Is Nike, if we ignored all of that stuff and you just looked at Nike at 120, yeah, especially based on its last earnings, they crushed it, right? They came in at $11.35 billion in revenue. I think that's the highest ever. They're going direct to consumer. They're cutting their margins, but the supply constraints and the supply constraint story is really having an effect on companies, especially retail companies, right? So, that is going to continue to be the overarching story, but Nike in a vacuum at 125, especially based on its earnings, I think is a decent entry. It's just if the supply chain constraints continue to happen, then you're going to see some more bearish activity. What do you think the impact on the stock market will be if the dollar will not be the reserve currency anymore? I don't think we'll be alive to see that. So, I think that if you're asking because of that Ray Dalio question earlier, because Ray Dalio talks about that a lot, I think there's a chance for there to be more than one reserve currency. We just saw, I think, was it China that bought oil from Russia with gold? I can't remember what company bought oil from Russia, but instead of using the dollar, they used gold, which is the first time since the petrodollar was created that a large transaction in oil was done through something other than the US dollar, right? So, yeah, I do think that there can be more than one reserve currency, especially if we're isolating it to certain commodities. But I don't think this stuff takes decades if it is going to happen. I don't think we'll see where the US dollar is not the world reserve currency at all anymore. But yeah, I'm not sure what the impact on the stock market will be at that point, honestly. But go back and watch. There's a video that came out. I'm sure you've seen it, but Ray Dalio talked about a changing world order. Go back and watch that video. It is excellent, but he talks about it in there. Roman Chuk donated $20. Thank you so much, Roman, for your donation to St. Jude's. Appreciate you more than you know. What is Jason Z? They love to talk shit when you post your plays on the chat. They love to follow you with no research. Don't trip. Keep doing you. Fear porn is all meat, Kevin. No, I mean, it's like if you're talking about the markets, I mean, again, like there's no room for emotions, right? I'm just talking about objectively what is going on, what has happened. what the trend says about the future, and how you can hedge your portfolio. I always talk about hedging. That is not doom and gloom, right? That is actually a positive outcome of reading the data. It's like, hey, there's actually some shit that you can do besides sitting on your hands. It's rich to say China's adversarial to the U.S. when the U.S. is the aggressor. I think you got to look up the word adversarial. I'm not saying that China is the aggressor. I'm not saying U.S. is the aggressor. I'm saying they're adversaries. So pick up a dictionary. How to do option trading course, no login. Latif, if you're on the Discord, hit me up. If not, email info@thetravelingtrader.com. And yeah, our people will get you situated. Are Google and Amazon going to go crazy after the splits? It depends on what the geopolitical situation is, and it depends on what the inflationary picture is. Really, honestly. But yeah, I would, as of now, I would be inclined to buy a long dated call and sell calls against that. So like a poor man coverage call, or you can call it a diagonal. But yeah. Kunal, what's up, Z-Face Killer? Isn't it the right time to buy growth stocks precisely when they are destroyed? It depends, Kunal. Be very careful about what you're talking about. Be very careful about what you're talking about. It depends on what you mean. If you are going to buy growth, stick to mega cap. Stick to stocks that have shown you they can turn a fucking profit. Stick to stocks that have good guidance, right? And preferably a dividend, but not necessary. Don't buy, when you talk about growth, people use the term growth too loosely, right? A lot of people talk about growth. They're talking about QuantumScape and DraftKings and Zillow and, or not Zillow, but I can't even, Coinbase, Robinhood, whatever. Those are not growth names, okay? So yeah, if you're talking about mega cap growth, yes, I'm with you. Most of my portfolio is made up of mega cap growth. When do you plan on shorting Bumble? Yes, I talked about this yesterday. So I said I would wait until today to see what the momentum looks like. And it looks like it's up another 2.83% today. However, we see this long wick here, meaning that there is a lot of profit taking at the top of these wicks, at the top of these candles. Probably we'll look to short Bumble either today. Would I short it tomorrow? I don't know. It really depends on what the options volume looks like on Bumble. I haven't even seen what the options volume looks like on Bumble. Let me see. Yeah, we're seeing not a lot of volume, but there's somewhat a lot of open interest. Maybe I'll do a call credit spread because there seems to be more volume on the call side. Maybe I'll do a call credit spread expiring in April. I don't know. It really depends on, I'll see how the day plays out. I mean, the market's only been open for an hour. So yeah, either today, tomorrow, potentially Monday. We'll see. Ron says, your day trade list, does your puts calls apply at opening or all day? It's not opening. It's, again, looking at the chart and playing the breakouts. Yes, all day. Seeking Alpha has a paywall. Yeah, I mean, anything that's worth its weight in gold is worth paying for. There is a major discount you can get on it, though. I think they're running a huge sale right now. So check that out. U.S. 10-year Treasury rises to 2% already? That quick? Let's see. Nope. Yeah, it did hit 2%. You're right. 2.01%. As I thought this would happen yesterday. We could get to that 2.05, which was near the high that we saw mid-Feb. But I would definitely buy, I'm definitely going to be buying calls on TLT. Probably calls expiring in April on TLT. Because remember, bond prices move inverse to bond yield. So as the yields go up, bond prices go down. But as that bond yield hits 2, you're likely going to see a lot of activity there. 2.05. You're going to see a lot of activity there from bond investors, which would, if, when people pour into that 10-year, the 10-year yield will drop, and even though TLT is related to the 20-year, but same concept, and the value of bonds will go, the dollar value of bonds will go up. So yeah, definitely looking at buying calls on TLT soon for sure. But thank you for that shout out. All right, let's see. Wow, I didn't know that about Neo shares. Speed of Thought says, yes, they're based in the Cayman Islands for sure. Holy crap, so Neo stock is a derivative. It's not even a derivative because a derivative has some claim to the underlying. You have zero claim to the underlying. You're basically buying depository receipts in a company that's based in the Cayman Islands, right? People don't like hearing the truth. Yeah, it's true. Unfortunately, but hey, you always get one person out of thousands. So I appreciate you guys. Dude is a clown. You're trying to educate us on the market. Not your fault. Yeah. Why they stopped liking Meet Kevin, guys? You guys are obsessed with Kevin. Hedging is the only thing keeping me alive. Tell him, Dean. Tell him, Dean. You and me both. This is my guy. Dude is a genius. I appreciate you. Not a genius, but I appreciate you. Vortexian, thank you so much. I appreciate you too. All right, let's see. Amazon reversal, bullish now. Not necessarily bullish. I just think it was at a good support level for sure. Right now, it's rocketing because of the stock split announcement. So yeah. Beto, what's going on? I wonder if Hawks monitors things like a human. Did I say I'm monitoring this like a hawk, or I'm watching this like a hawk? That's probably why you're saying that. Yeah, I do tend to say that a lot. Yeah, I wonder if hawks say I'm watching this thing like a human. Although we don't have as good of eyesight as hawks do, that's for sure. Hawks definitely have better eyesight than us, so I don't know why they'd want to monitor things like humans. Latifa, thank you so much for your donation to St. Jude's. Appreciate you. And appreciate you being a longtime watcher. You've been here for years. All right, let's see. Z, regarding the comment on growth, Tesla, FCF positive. Yeah, I mean, if you're just talking about Tesla, yeah, I mean, I think Tesla is an okay buy here for sure. All right, let's see. Talk about SoFi. All right. SoFi is not a great company from a fundamental perspective. They do have a great, and from a technical perspective, we actually had shorted SoFi after earnings, and made a good amount of money on that short. That short ended up being 100%, by the way. And guys, I haven't said this all stream, but if you want access to all of our hedges, shorts, long-term holds, stock alerts, etc., link is in the description below. Come be a part of it. Would love to have you. But yeah, no, SoFi is in a terrible, terrible technical pattern here. Terrible. It's still overvalued too. That's the thing, is that people tend to look at the dollar value of the stocks and they're like, oh, this thing is so undervalued. How can it trade like this? But, SoFi, I do think that around the $8-9 level is a buy for the long term, but I wouldn't go heavy in SoFi. It's still trading at 6 times sales. This was way worse before, but it's still trading at 6 times sales, and it just has not shown any sort of ability to turn a profit whatsoever, right? So I tend to stay, especially during these times, I tend to stay away from stocks that are not able to turn a profit. So its net income is horrible, and it continues to get worse. It's not even net income, sorry. It's called the net loss. And it continues to get worse. So, I know that companies that are growing are not expected to be profitable, but the stock market right now is punishing companies that had high valuation. So, around the $8, $9 level, I don't mind picking up some SoFi. It definitely would not be a cornerstone in my portfolio. And I personally think from a technical standpoint, you can wait until this downward channel is broken to the upside before jumping into it. But yeah, it does not look great at the moment, to be honest. I already talked about NEO multiple times. Albert, rewind the tape. All right. Is TSM a risk because of its location? Yes, Max. That is a lot of the reason that TSM has seen sort of a muted stock price, but they are building outside of Taiwan because now they are recognizing that threat. So, yeah. Kevin equals pump and dump. No, I don't think he pumps and dumps in the sense that you're saying. All right. Guys, do me a favor. If you haven't already, hit that thumbs up. I appreciate each and every one of you for joining. Thank you guys so much for joining. Thank you to those who donated to St. Jude's. I appreciate you so much, and I'm sure they appreciate you even more. Thank you guys for joining this and even caring about anything that I have to say. Again, U.S. inflation year over year, 7.9% versus 7.5% estimated. Most of it was priced in. That's why you're not seeing a huge price reaction now. Stocks will likely continue to be in a downtrend, as I said, in this downtrend here, in this slow drip downtrend, until something fundamentally changes on the geopolitical landscape and the price stability landscape. Look out for the Fed meeting March 16th. You definitely want to watch out for that. I will not be live streaming because I will be away, but I will definitely keep you guys up to date and potentially record a video. But look out for the Fed meeting March 16th, and let's see what kind of rate hike we get. Right now, it's almost 100% probability that they're only going to do a 25 to 50 basis point rate hike. Let's see if we get higher than that. I would be inclined to say that during the supply chain constraints and the geopolitical climate, the Fed cannot hike rates higher than that, but we will see. Yeah, guys, continue to hedge, continue to learn how to day trade, continue to learn how to play both sides of the market. Again, if you want access to all of our stuff, link is in the description below. Come be a part of it. Would love to have you. Hit that thumbs up, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.